Today in 5, 4, 3, 2, and 1. Hello, everybody, and welcome to another episode of the Capital Gains Tax Solutions Podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is an amazing way for you to exit highly appreciated assets, to diversify your wealth, get time on your side, and create and preserve more wealth. And I'm excited every episode to bring on some of the best real estate financial wealth minds in the world. And where together we talk about ways to build wealth, ways to build passive income, also ways to solve complex, tax strategies as well. And today's episode is not going to disappoint. I promise. Our guest is out of the great state of New York, and he oversees the acquisitions and capital markets for the firm Lone Star Capital, and has acquired over $500 million of real estate, and he's evaluated thousands of opportunities using proprietary underwriting models, and published the number one book on multifamily underwriting, The Definite Guide to Underwriting Multifamily Acquisitions. He's written over 50 articles about underwriting, deal structures, and capital markets, and so much more. Please welcome to the show with me, Rob Beardsley. Rob, how are you doing?
I'm doing great. How are you?
I am well. Thank you so much. And for our listeners to get to know you for the first time, would you give us a little bit more about your story and your current focus?
Yeah, absolutely. So my story begins in Silicon Valley, California. I grew up in a real estate family. My parents ran a residential brokerage firm from home. So I was exposed to real estate at a very young age. But given the fact that I grew up in Silicon Valley, there was a lot of tech influence in my family and in my neighborhood. So my parents pushed me to go into the tech route. They said, look, we work really hard. We struggle in real estate. Go do something much more exciting in tech. Go do a startup. Go into consulting. And so that was my path. I went to school for computer science at Carnegie Mellon. But of course, I couldn't avoid it. The real estate bug got me. And while in school, I started really just consuming everything to do with real estate. And I thankfully stumbled upon multifamily. So my family's background in single family helped me understand multifamily, but they're vastly different. And the real difference is in the scalability, the long-term wealth nature of it, rather than the short-term flipping nature of it. And then also, like you mentioned in your introduction, the tax strategies are also it's more complex, but there's more opportunity. So definitely excited of me to the point where I met my business partner in college, got our first deal under contract together back in 2018. And that's when I dropped out of school and started Lone Star Capital formally. And then 6 years later, in 2024, we have thankfully scaled up to having had acquired over 500 million in multifamily properties in Texas. So Texas Multifamily is our strategy. We buy properties that are usually somewhere between 20 and 40 years old, and then we renovate them, we improve the management, and we optimize the cash flow and value of the properties for our investors.
Amazing, Rob. And by the way, if you want to learn more about Rob, you can go to lscre.com. It's lscre.com. I love the background. I love the Silicon Valley. We'll touch on a little bit of some similarities with my background too later on in the show. But before we go into what we're talking about today, which is Texas Multifamily Insights, exploring the Lone Star's capital investment kind of strategy and ways to grow wealth there, I do want to take one other step back. I believe we've all been given certain gifts in this life, and these gifts have been given us to be a blessing and help to others. So go back to the Silicon Valley days. What would you say was the one or two strengths or gifts that you believe you were given, and how do those help how you help and bless people today?
Yeah, that's a fantastic question. And so for me, growing up, I naturally gravitated towards leadership and helping others and tutoring. So going back all the way to very early school days, I was kind of singled out by teachers as someone who was good with working with the special needs kids. And so they would kind of group me up there sometimes, and I would help out there. And then I became a math tutor. And then when I played football, I'd help younger kids. I was a quarterback, so I'd be a quarterback coach. I also, on the side, actually made quite a bit of money in high school by being a piano teacher. So my parents forced me to learn piano growing up. I absolutely hated it, but a switch flipped when I turned 16 and started to enjoy it. And not only enjoy playing, but I enjoyed teaching, like so many other things that I've enjoyed teaching. And so I started teaching piano on the weekends, biking to different families' homes and teaching piano. And obviously that's a pretty good skill. So I was able to earn a decent amount of money on the weekends. being a piano teacher. And then that has naturally transitioned into my current position today, which is funny enough, you don't really think about how teaching and leading are similar, but running a company and having employees, you have to not just lead them, but teach them. And, they're almost one and the same. Like say, like the skill of sales is very much so intertwined with the skill of leadership, which is also very much so intertwined with the skill of teaching, right? Because if you're selling, you're really teaching someone about what it is. And I'm sure you spend a lot of time educating people on getting smarter on capital gains tax solutions, right? Because half the battle is getting people to understand it. Because once they understand the magic and the power, then they're selling themselves. So I think a confused mind says no, and that's what both you and I, I'm sure, aim to counteract.
Absolutely. I absolutely love that. What a cool background. And that helps us today with the topic at hand, which is Texas Multifamily Insights. So, Rob, what's the number one secret to, just building wealth in Texas with multifamily? And then we'll dive into a deal, one of the bigger ones that we've seen done in a while that you just got done. But what would you say the number one secret that you guys have found to building wealth in Texas?
Well, something I find interesting about Texas, and one of the things that actually initially attracted us to the market, is not only its size, but also the transaction activity. So what you have is you have big markets: Austin, San Antonio, Dallas, Houston. These are major markets, which is great for us because that means they're big sandboxes to play in. We can look at a lot of opportunities, we can pass on a lot of opportunities, and only invest in the best deals for us. But the other interesting thing, which is somewhat unique to Texas, is it's a bit of a trading market. So there are long-term owners, but there's a bit of a mentality in Texas where people are buying and selling real estate, specifically multifamily, which is our space. So the average hold period in Texas might only be 3 or so years. And I think that's a bit of a product of the recent market that we've been in, which has been a very hot market. So people were benefited by buying and then quickly appreciating the asset and selling. And I think now that we have had a bit of a reset in the market, I think things are going to be a little bit slow, which is good because that's what real estate is really all about. And so that's my insight, which is a little bit of a contrarian thing, is even though that Texas is a bit of a trading market and people have made a lot of money buying and selling quickly, the real money, in my opinion, is made on a long-term basis. It's thinking long-term, it's investing long-term, because not only is that the best way to build and compound wealth on a tax advantage basis, the best, but it also reduces your risk the most, because the longer your horizon, the more you're able to ride out downturns, the less risk there is in terms of getting caught in a flip with bad timing and actually losing capital. So that is my, I'd say, biggest Texas multifamily insight.
I think that's a great one, and it makes a lot of sense. And so it sounds like, Texas, it's a big enough market to scale in the sense that it's a major market, but also the more of a mentality of trading and moving. So you get to see a lot of deals. So you can say yes to the ones that make sense, no to the ones that don't, versus some of the dinosaur markets where some of these ultra wealthy folks, like maybe New York or California, they never sell, right? They just like collectors of monopoly, like Boardwalk Park Place, and they're just going to hold, right? And they're going to pass it down. And so Texas gives you that good opportunity of mix, where it's a big enough market and it's a scalable market, meaning there's going to be enough deals and transactions to see and do. That's number one. And then number two, you said just the sheer size of Texas. Like, I mean, it's just massive, right? You have Austin, you have Dallas, you have Houston as the major metros, and then you have the Fort Worth there with Dallas as well. So is that a fair summary on those points there, Rob?
Yes, it is.
Okay, excellent. What would you say the number two secret is to building Texas multifamily wealth, right? And maybe even just bring it to right now, like with the deal that you recently purchased, which was fantastic, over $100 million deal.
Yeah, I mean, there's so many ways to go with this answer, but what I would say is, since you wanted to keep it to kind of current events and specifically the portfolio that we just acquired that is over $100 million, that was a very unique deal. And it was also a very unique time. We closed that deal towards the end in about November 1st of 2023. And not very many people were closing deals at the time. It was a very tough time to close. And so what was the difference? The secret was the fact that we had actually partnered with a local housing authority to do a long-term 99-year property tax exemption program, where we did half of the units at a restricted rent level in exchange for that 99-year property tax exemption. And so for those that aren't familiar, Texas actually has tremendously high property taxes. So if you're able to get those exempt or abate them, you're able to boost the property's income dramatically. And that's exactly what we did. Even though we were cutting our revenue a bit by having lower rents, in the end, it's a huge positive. And also, when you look at it from this perspective, it's not just a huge positive to your income, but it also is a huge positive to your downside risk protection. And that's because we changed our business model on these deals. Instead of trying to pursue the biggest and highest rent increases in order to achieve our returns, we actually were achieving our returns or projecting to achieve strong returns by actually decreasing rents. And that's a paradigm shift. And that's obviously a much lower risk proposition as compared to a lot of the more conventional deals that you see out in the market where people are buying and value adding deals by renovating and trying to raise rents. And not only is that generally more risky, but I think it's particularly a higher risk in today's environment where inflation is slowing down, rents are slowing down, they're flat, if not even down in some markets. So I think over the next couple of years, we're going to see not only a resetting of the market, but I think also a bit of a resetting as far as rents and property performance. So in a more kind of flat to even softer market, I feel much better about a business plan where we're actually banking on the returns by reducing rents rather than raising them. So that's a huge, huge game changer, huge Texas specific insight. Obviously, there's affordable housing programs around the country, but because we're hyper focused on our core markets of Texas and the fact that my business partner is a tax attorney, we are uniquely positioned to take advantage of the local laws where we can really dive in, build the relationships, and pull off these great deal structures.
Absolutely. But we say it here all the time. It's not just about cash flow, it's about tax flow. And in fact, it's increasingly becoming more about tax flow because guess what? The government has a spending problem. It's, over 33 trillion or close to that now. That means we all have a tax problem, right? And there's only so much rent that you can raise. And the market itself was only on a 12 to 13 year bull market run. And it became unsustainable for where these cap rates were at. And obviously where debt flow now has doubled in the past, year and a half. You now have a big challenge where you've got to really focus on tax more because the cash flow it's unsustainable to just continue to raise rents, increase rents. So I like the way you put that. You have the downside risk protection because you're looking at affordable housing and you're restricting the rents by, selling 50% of the units, but that's a 99 year property tax exemption, which is incredible, which property tax is the highest, one of the highest in Texas. So that makes sense. Can you give us some more metrics on the deal, Rob? Like average price per unit, average cash on cash return, what kind of debt did you were we able to put in place? Kind of give us that overall, just metrics for returns.
Yeah, so this deal was a 666 unit portfolio comprised of 3 properties. And one of these properties is 240 units right inside the loop. That's the 610 loop of Houston. So that's kind of the heart of Houston, super quality core location. And this is a beautiful 2008 vintage asset called Meritage. And this deal is, like I said, stands alone, kind of more on the southwest side of town. And then the 2 other properties that complement this portfolio are called Beckley and Highland, and they're actually right next to each other. So they are quasi one deal because they can, even though they have 2 different property names, 2 different addresses, 2 leasing offices, their own amenities, they both have pools. You can really, from an efficiency perspective, operate them as one property. And that's one of the huge advantages of buying properties near each other. That actually this acquisition marks the 3rd situation in our portfolio, specifically in Houston, where we own 2 properties that are directly next to each other. So that's a huge advantage because you're able to cross promote the assets. So if you have a tenant that comes to one of the properties and let's say you don't have 3 bedrooms at one property, but you have 3 bedrooms at the other or what have you. So there's ways to cross promote to the tenants to optimize the performance of the properties. And then from a management perspective, you're able to optimize management because you can have shared payroll, which helps with efficiencies and scaling up your costs, so reduce costs. And so all in all, those are some of the massive benefits that we gain from being focused and being vertically integrated, which means our property management and our construction management are in-house to maximize the advantage that we can take on having a clustered portfolio.
Excellent. Okay. And by the way, you can learn more about Rob Beardsley by going to lscre.com, lscre.com. So 100 million by about 660 units, right? So about 160K a door. So that sounds pretty reasonable to me. What was the debt interest rate versus the going in cap? And then where do you see, efficiencies growing, and kind of talk us a little bit about that.
Yep. So the debt portion, we generally focus on 7-year, depends, but 5, 7, or 10-year fixed rate debt. And on these deals, we opted for 7-year fixed rate debt through Freddie Mac. And Fannie Mae and Freddie Mac, for those that aren't familiar, are government sponsored enterprises that are sources of financing that are unique to multifamily. One thing that really helps multifamily out is that you have essentially government backed debt, which provides almost guaranteed liquidity in the housing market. This is super beneficial because we're able to tap into the best interest rates, the best deal terms available on the debt side. So on these deals, we locked in 7-year fixed rate debt at around 6%. And because of the tax exemptions that we were getting put in place at closing, our effective cap rate was a post property tax exemption cap rate. So we were able to close and day one have an improved cap rate because we weren't paying property taxes day one. So our improved cap rate, if you will, day one was 6.5%. So without doing renovations, without taking a lot of operational risk, we were already achieving a positive spread between our cap rate and our interest rate, which many savvy investors these days are preaching the importance of positive leverage. That's what they call it. It's positive leverage when you have a cap rate that is higher than your interest rate, which helps you have higher cash flow and lower risk.
Excellent. Yeah, I love that. Great job. And then let's talk about a little bit of a tax flow here. So are you guys planning on doing a cost seg study in depreciation, and how are you structuring your syndications with your investors?
Yeah, absolutely. So as standard, I'm sure for you as well, for us, we do cost segregation reports, and then we elect bonus depreciation. We have historically elected bonus depreciation, which is sunsetting, but also they're reintroducing a bill now, as I'm sure you've seen, to bring 100% bonus depreciation back. So those are the things that we always opt for. And these deals, even though they're more unique as far as their affordable structure, they're no different. So we still elected for the cost seg and the bonus depreciation, which will benefit our investors on their 2023 taxes, because we'll be able to have accelerated losses that they'll be able to utilize to offset income in their portfolio. So
perfect.
That's something that we typically do. And then another thing, just jumping ahead a bit, are 1031 exchanges. So 1031 exchanges, in my opinion, are one of the biggest builders of wealth. I think it's just such a hack, and it really makes real estate stand out from the rest of the crowd when it comes to your options as an investor. And a 1031 exchange, as I'm sure you guys have talked before on this show, is a tax deferred exchange where you're able to sell real estate, and then without paying tax, you can defer the gain into a new piece of real estate and essentially defer paying tax, and you're able to compound your equity more quickly because you don't have tax drag along the way. And so for us, 1031 exchanges are a big part of our business. We look to 1031 exchange upon sale of an asset and then invite our investors to 1031 exchange with us into the new deal. But in addition to that, we also have 1031 exchange investors who they are selling property, and they might be looking to roll $1 million, $2 million or more into a deal with us where they can be a minority owner with us through a tenancy in common, which is very similar to what you mentioned early on in the show, which is the DST structure as well.
Absolutely, Rob. And while we're at that, let's dive into this, right? Because this is definitely what we geek out about all the time here at Capital Gains Tax Solutions. So I love all of that, by the way, and I'm a huge proponent of the 1031 exchange. However, sometimes it's not your friend, right? Like I would argue that the really before 2023, right, before the 2022, everything started to really shift. We saw some people overpaying for property, right? And they were, what's called a shotgun wedding, and they're just making outrageous offers because they have 1031 money burning in their pocket. and they're coming out of California or New York or all these states that are highly appreciated, and they're just rushing in to try to buy deals, but because they wanted to defer the tax. And now they may or may not have got the rate cap on their interest rate, right? And now they're losing these properties, right? And we would argue that because time was not on their side, right? In fact, time was their enemy at that point. And now it's proving to be true. In fact, we saw the same thing happen in the run-up of the '08 crash. The only people who really lost money commercially wise were those who had overpaid for properties, had too much debt, not enough liquidity, not enough diversification. And so it created a disaster for those who lost. In fact, I was working with a client in Sacramento, $50 million worth of portfolio of apartments. He had 80% LTV. He had done multiple 1031 exchanges, and he's a value add guy, hands-on guy. He lost all 50 million of real estate, lost his house, went bankrupt. And we just kept pointing to the 1031 exchange because he just kept moving it and couldn't, I guess, kind of sit in that safe harbor. So we offer a strategy a little bit different than the DST might be thinking of. Most people think DST, they think of Delaware Statutory Trust, which is essentially a way to defer capital gains taxes via a 1031 exchange into like a syndication, if you will, right? You can also do the tenant and common seat structure like you're talking about. But ours is called a deferred sales trust, which allows you to exit any asset of any kind. So it could be crypto, business, real estate, primary home. It could be a partnership separation. And not only can you defer that capital gains tax, but you don't have to replace the debt, right, of equal or greater value. You don't have to do like kind investment real estate. In fact, you can sit in T-bills at 5% and wait for the market to shift, which is what we've been doing mostly these last 2 years. We've mostly been sitting in 10% interest rate loans with multifamily, very low LTV, that we get the money in about 30 days. And we've been waiting for this, and now we're ready to pounce. And so I know that's a whole lot, but I'm just curious, when you hear that, we call it the Netflix version of exit planning versus the Blockbuster 1031, which Blockbuster is still fine. You can still be okay with that. But what comes to mind when you hear about that new strategy, especially being that your business partner is a tax attorney?
Yeah, so I misheard you. The deferred sales trust is also definitely an interesting strategy, which has much more flexibility, and that makes a lot of sense because you're able to essentially get out. It's kind of like the last stop on your train of wealth building, or if you've got multiple 1031s and you're finally done with the 1031 train, right? That's the best way to get out. I'm not an expert in it by any means, but I am familiar with it. For what you're saying is very true about the 1031, and that is a frustration about the typical 1031 exchange. And I think the other frustration also is that most people that are active owners of real estate eventually at some point want to become passive owners of real estate. But if you are 1031ing your equity every time, you are likely 1031 exchanging into an even bigger property, right? Because if you went from $1 million to 2 million and then you exchange into a bigger property and you have to replace the debt, so you have to bring all the value, you were just exchanging into obviously what could be a lucrative investment, but also a bigger headache because you're exchanging it to a bigger property. And so you're just creating more work for yourself. So I think the unique thing that we offer is the ability for someone who is an active owner of real estate to 1031 exchange into a more passive version of owning real estate through the tenancy in common, where they own a minority share of a institutional size and quality managed deal that we're running, and they're able to benefit and participate as a 1031 exchange investor through the tenancy in common.
Yeah, I couldn't agree with you more. By the way, you can learn more about Rob Beardsley by going to lscre.com, lscre.com. And if you want to learn the differences between a 1031 exchange or deferred sales trust and a Delaware Statutory Trust, you can go to capitalgainstaxsolutions.com. We also recently released the best 1031 exit plan, which is not only a course on all of these, but also the service. We'll give you the 1031 service as well as the deferred sales trust as a back cap plan service, because you might want to find that 1031. And by the way, if you find it, fantastic. Like you always do a 1031. It's less expensive. You maintain 100% control, maintain the step-up basis. And like Rob said, it's one of the best ways to build wealth and continue to roll if that's what you wanted to do. However, if you want some diversification, you want some time back on your side, you can use the deferred sales trust. But oftentimes, Rob, we're actually doing a little bit of both. In fact, I just did an exit for a client out of Texas. He was selling a $6 million piece of land. He did a partial Delaware, a partial 1031 exchange, and a partial deferred sales trust. Because sometimes you have the hammer, you have the screwdriver, and maybe you have the saw, right? Each has its own utility for the tool that you're using. And it's not always a one size fits all. And sometimes people want some liquidity, some diversification, and some ability to access the capital and do their own deals and or be passive. And so that's why we like to offer all three strategies. That being said, we're running out of time. Are you ready for the lightning round?
I'm ready.
All right. Knowing what you know now, if you go back to your 20-year-old self, what's the one gold nugget? Make sure you tell us to do.
Yeah, so I actually turned 27 in a couple of days, so excited about that. But if I were to go back in time when I started the business, I started learning about the business at 19, started the company at 21. And I think the biggest thing, and this is, I know, so much easier to say looking back, but especially given that I was young and I was a dropout, I struggled with imposter syndrome. And I think a lot of people resonate with that because wherever we're coming from, whenever we're trying to push ourselves to do more, we're going to question, are we really that person that we're trying to become? And the reality is, no, you're not. You're not that person yet, but you're working towards it. And so just like people that are listening, I should have given myself more of a push and just more leeway to say, hey, you're not there yet, but this is who you're becoming, and just be comfortable, be confident, and lean into it. And the thing that I struggle with is, again, I was so young and I didn't have experience. So I wanted to hide myself away. I didn't want to reveal how young I was. I didn't want people to catch me and find I was found out, right? And instead, I should have just leaned into it, been honest, and been authentic, because that's what resonates and that's what will get you the furthest. And so once I finally did that and came clean to the world, if you will, and started producing content and writing articles and showing my face on camera and talking to people and meeting with people and sharing my story as it is, that's when my growth really accelerated.
Amazing. That's fantastic, Rob. Matt, if you haven't read a book on that yet, you should, right? Because that'd help a lot of people out, because it's not uncommon. So second question, what's the number one book you've recommended and gifted the most in the past year?
Oh, in the past year, well, in the past couple of days, I've recommended the new 1 Minute Manager. And this is a super short read. I read it in just about an hour. So it's a cute little book, and it's just a really nice book about management. And I can literally break it down in 2 seconds. Basically, it's all the things that we know, but we need to do a better job of as managers of people. And that is, you need to set clear expectations. You need to praise people when they do things well, and you need to adjust or give a reframe when people make a mistake. And that's literally the entire book, and I love it.
I absolutely love it too already. And I want to go get the book. The new 1 Minute Manager, clear expectations, praise when they do something well, and then adjust or reframe when they need to have a change. Question number 3, what are you most curious about right now?
Most curious about. Okay, so similar to this topic, I'm reading a book right now called Top Grading. And honestly, it's so funny. I've procrastinated reading this book for so long, and I think it's because of the name of the book, Top Grading. Like, what does that even mean? Sounds like a silly thing, but turns out I started reading this book. Turns out the author was the number one advisor to Jack Welch, the former CEO of GE, who's regarded as one of the best CEOs of all time, especially when it comes to hiring. And this guy was his advisor for hiring. And so this top grading book and this top grading method is their methodology for how to hire and promote people. And so this is super fascinating to me, because I know that as we're growing our business, the number one thing that I can focus on to improve our business is our people, and making sure that we're hiring the best and that we're promoting the best and giving our people the best possibility to succeed.
Fantastic. I just added it to the wish list for my Audible, right, on my phone here. So as I work through my other books, I can start to read that one. Fantastic. Top grading. Next question, number 1 leadership theme or quote that you strive to live by.
Leadership theme or quote. Well, I don't know if this is exactly a leadership theme, but something that we say here in the office a lot is we want to help our investors sleep well at night. That's something that it's kind of core to our philosophy. We're not in the business of just delivering financial returns to our investors. We're in the business of providing a good quality experience, because investing can be frustrating. It can keep you up at night, right? So that's exactly what we're trying to avoid. We want it to be a pleasant experience, a smooth experience, and that's what we preach.
I love it, Rob. Last question. Actually, second last question. Number 1 way you're using ChatGPT for your business or daily life or anything like that?
It's a great question, and I'm definitely remiss in my use of ChatGPT. So the number one way that we are using it, I would say, are for crafting or editing articles or longer emails and things like that. I think the use case for writing, especially given the fact that I am a writer, is just such a no-brainer for ChatGPT. But frankly, we're only scratching the surface. So I'd love to dig in more.
Awesome. Cool. Last question, Rob. After all your success, helping all the people you've helped, doing all the things you've done by age 27, how do you best stay centered in your values, and how do you stay encouraged to charge forward or reach new heights?
Couple ways. So meditation has been a big part of my life. When I turned 18, I had a big injury. I was a football player in high school, and I injured my hip really badly, and it really kind of made me depressed, and I lost purpose because I felt like I had lost who I was. And that's when I found meditation, and that was a huge game changer for me. I feel like I got way more clarity. I became a happier person. So thankfully, I've held on to that habit of meditation, which definitely keeps you centered. And then another thing that I picked up, I think around 19, is gratitude journaling and journaling in general. And so gratitude journaling is a super simple way to spend a couple minutes just writing down anything that comes to mind that you're grateful for. And it puts you in a really good headspace to obviously be grateful, but then also keep things in perspective so that way your goal setting is in alignment with your true values.
Rob, it's been more than a pleasure to get to know you. I felt like we had met each other because I think we've seen you online, or I saw you speak at some conferences and stuff. I want to thank you for being on the show, sharing your wisdom with us. I want to encourage you to keep using your gifts of leadership, teaching, and helping others. I can tell you have a heart for helping others and being a great leader. And so continue to do that. And someday, I'd love to see that book. Maybe you already have a book. You could, but on the book on what you talked about on the imposter syndrome and working through that, I think that would be a really great read. That being said, for our listeners who want to get in touch with you one last time, what's the best place for them to find you?
Yeah, head over to our website, lscre.com. So that's Lone Star Capital's website, where you can learn more about what we do. You can get in touch with me, and there's also some free downloads. You can download our underwriting model that we use to analyze our investments every single day. And look forward to getting in touch.
Amazing. Thanks, Rob, for being on the show. Also, I want to thank everyone for listening to an episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the 1031 exchange or the deferred sales trust is an amazing way for you to exit highly appreciated assets, to be able to defer the capital gains tax, or with the deferred sales trust, eliminate that estate tax and get time on your side. In fact, we believe it's the most vetted tax strategy your CPA has never heard of. And if you want to learn more about it, you can go to capitalgainstaxsolutions.com to learn more. As well, make sure you go to experttaxsecrets.com to start with the best 1031 exit plan. Another saying we have around here is friends don't let friends overpay in a 1031 exchange, and friends don't let friends do a 1031 exchange without having a backup plan with the deferred sales trust as an option. Just go to the best 1031 exit, or go to experttaxsecrets.com and click on the best 1031 exit plan. That being said, please rate, review, subscribe. Appreciate everyone out there, and we'll